Simply put, Berkshire Hathaway would not be the same without Charlie Munger. It's a tall ask for someone to follow in the footsteps of someone so instrumental to Berkshire's success. But Munger himself noted in 2021 he believed Vice Chair Greg Abel would keep the culture at the investment conglomerate. And in a letter last week, Buffett acknowledged that at 93, his own time may soon come to a close, but assured shareholders Berkshire was built to last. With more on the future now, let's talk about more on the future. Thomas Hayes is joining us, Great Hill Capital Chairman and Managing Member, alongside Greggory, Warren, Morningstar Senior Stock Analyst. Tom, let's start with you. Are you confident in this, upcoming generation of Berkshire? As we've been talking about throughout the hour, we don't know nearly as much, or at least have not heard nearly as much from the likes of a Greg Abel as we have from Buffett and Munger.
Well, there's no question there's going to be full confidence in the future of Berkshire Hathaway. The businesses run themselves. People are going to continue to get their ice cream at Dairy Queen. They're going to continue to use their iPhones. They're going to continue to save money on their insurance at Geico. The home office right now, the whole concept of a decentralized business, they have 26 employees at the home office and tens of thousands of employees throughout the operating subsidiaries. But I did want to say one quick thing about Warren Buffett. A lot of people look at about Charlie Munger and Warren Buffett. They look at Charlie Munger as Warren's right-hand man. But I think people forget that Charlie was his own man, sometimes referenced as the Oracle of Pasadena. Mm-hmm. And I want to give you one key example that he did in 2001, which really inspired me and hasn't been talked about a lot in the last 24 hours. He bought a little company himself, stock in a company called Tenneco. And Tenneco was actually kind of a Ben Graham net. He always talks about buying wonderful businesses at a fair price. This was a fair business at a wonderful price. The stock had fallen 80% from 2000 to 2001. He read about this company in Barron's. He said, I've been reading Barron's for 50 years, and I got one investment idea. Here's what he did. The stock was at $1.50, $1.50 to $2, down from $10. He bought $10 million worth. Within 3-4 years, the stock was up to 15. He made about $80 million between the stock and the debt that he bought. He took that $80 million and he gave it to Li Lu in the early 2000s when China was out of favor, and Li Lu turned the 80 million into $500 million. So 2 chess moves, the Oracle of Pasadena turned $10 million of his own money into $500 million. And I think people always forget that. And, Munger always said, I didn't intend to get rich. I just wanted to become independent. I guess I overshot.
It's a good. I wish I could replicate that track record. Greg, let me get over to you. And we're watching Berkshire Hathaway shares all day. And follow me here. Do you think Berkshire shares are overvalued, that investors are underpricing the risk when Warren Buffett is no longer leading this company? There seems to be a lot of belief that the culture will live on, but that is a wildly untested thesis.
Yeah, I think it's kind of difficult to look at from that perspective. I mean, relative to our fair value estimate right now, the stock is about 10-12% undervalued. But I think over the past, I've been covering Berkshire now for 15 plus years. And I'd say probably over the last 10 years or so, I think investors have sort of discounted the fact that, Buffett's not going to be there forever. And I think that that's been sort of baked into how the valuation has sort of evolved over that time frame. And if you look at it, from Buffett's perspective, he's really made a concerted effort over the past 2 decades to really sort of focus investors, the shareholders, on the businesses, on what they have sort of built here, this decentralized conglomerate that really takes care of itself. I mean, the fact that there are so few people at corporate and that Buffett's day-to-day duties have really just involved looking at potential capital allocation decisions. He spends far more time reading through K's and Q's and than he does sort of worrying about how one plant is running or how another operation is running. He's really sort of left that down to the managers down the line. And that's kind of the beauty of the business model right now, is that it's sort of self-running. And there's not a whole lot that the corporate's going to need to do going forward, even without Buffett at the helm. Now, I brought this up a few years ago at one of the annual meetings that, having Munger, having Buffett both there always gave Berkshire sort of an edge. And we saw that during the financial crisis. We saw it during other periods of time where people that were in need of capital and need of Buffett's seal of approval would come to Berkshire and be willing to pay 10, 11% on the amount of capital they were getting from Buffett and company just to have that seal of approval attached to them. And I think that Berkshire will continue to sort of play that role in the future because they're always going to have a lot of capital, a lot of excess capital on the books. But I think that premium that they've been able to garner, with Buffett at the helm is probably going to be less than it was, in the past. And when I asked that question actually at the meeting, Charlie actually agreed with me and said that, that's probably likely to be the case, that he could see a 1 or 2% percentage reduction.
Leave it to Charlie, I guess, to be sort of realistic, even if it was not in his favor. Thanks to you both. Really appreciate perspective. We got to leave it there. Thomas Hayes, Great Hill Capital Chairman and Managing Member. Good to see you. And Greggory Warren, Morningstar Senior Stock Analyst. Thanks for your perspective.